everyone. My name is Marilena, and I'm your hostess for today. Together with me, I have Peter Yossi, our
Yes,
senior market analyst at IronFX. Hello, Peter.
nice to be here.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So, Peter, what are the latest market updates?
There seem to be extensive worries about inflation, especially in the US economy, which drove the markets yesterday. However, they're still present today. Yesterday, it was characteristic that we had a meeting between Fed Chairman Powell and US President Biden. Now, at the meeting, exactly these worries about inflationary pressures within the US economy were highlighted. And that tended to intensify the market worries about the issue as well. At the same time, we have to note that the Fed chairman also underscored the independence of the bank in relation to the US government. And practically that also indirectly may have underscored the bank's mandate to curb inflationary pressures and promote full employment at the same time. It would also be interesting to note how former Fed Chairman Janet Yellen, which is now finance minister in the US, had she was wrong about the temporary nature of inflationary pressures in the US economy on the different path. Actual inflationary pressures seem to be here to stay. And thus the issue is still being discussed heavily among market participants. Across the pond, across the Atlantic, we would move to the UK. Inflationary pressures are strong in the UK as well, and especially about food prices. And that seems to be more or less increasing the worries about the possibility of stagflation in the UK economy. I would dare to note that there is a hint of political instability also for the UK government, given that the Tories, the party which is in power right now, tend to worry that should Johnson, the UK Prime Minister, actually face a rebellion in the UK Parliament about Partygate, he may be calling in for a snap election. That should be in the next couple of months. And it's not quite certain what would happen in such a scenario. So there is a slight degree of uncertainty regarding the UK political scene. However, stakes in this case are high, and that's what's driving the uncertainty about the issue.
Okay. And what is expected to be the highlight for the day?
Oh, definitely the highlight for today is expected to be Bank of Canada's interest rate decision. Now, the bank is expected to hike rates. The markets seem to be in the possibility of the bank performing double rate hike. That would be practically a 50 basis points rate hike, raising rates from 1% to 1.5%. We must note that inflationary pressures accelerated further in April in the Canadian economy. Also, the Canadian economy is facing a red-hot housing market. On the flip side, there was a deceleration of the GDP growth rate for quarter one, and that tends to advise caution here. But we think that the mandate of the bank is to actually curb inflationary pressures. So the slowdown of the Canadian economy may be worrisome, but for the time being, BOC is going to remain hawkish. As for the decision per se, there are three possible scenarios which could actually provide some support for the loonie. The first would be that the bank actually delivers a 50 basis points rate hike. The second would be whether the bank will be including a hawkish forward guidance, a confident guidance that more rate hikes are to come. And the third would be a combination of the two. Anything less would practically leave loonie at the best case scenario, practically non-interest. However, it could also weaken the loonie. So we have to carefully see not only the level of the interest rate as such, but also the forward guidance and whether the bank intends to perform more rate hikes in the coming meetings in order to curb inflationary pressures in the Canadian economy. That's the big issue. Also, cat traders should keep an eye out for oil prices, given that Canada is a major oil producing country.
Okay. And Peter, why did the oil prices drop?
Oh, oil prices dropped yesterday, and would be complimentary comment. A report surfaced that practically OPEC is considering suspending Russia from its commitments about oil production quotas. Now, such a case could actually allow Russia to increase production levels substantially, also to fund the war in Ukraine. It's a big issue. And we have to note that OPEC is going to be having a meeting tomorrow. Logically, the meager increase of production levels should be ratified. On the other hand, though, should Russia actually be suspended from the production quotas, that could lead to a wider production level, not only from Russia, but from other countries, OPEC members as well. And I think that is going to be the main drive for the next couple of days. That's today, tomorrow, when we have the OPEC decision as such. On second note, we would also like to note tonight we are getting the AP weekly crude oil inventories figure. Should there be another surplus reported, especially if it's higher than prior weeks, around 500,000 surplus, we may see oil prices weakening somewhat. And we would also note EIA's weekly crude oil inventories figure, which could also affect oil prices.
Okay. And how is the USD behaving?
The US dollar strengthened. It was characteristic that we had, I would dare to say, a switch in the market sentiment. We can see it more clearly in the technical analysis later on. It was more like the worries for the inflationary pressures within the US economy tended to provide support for the US dollar. At the same time, we have to note that US yields were on the rise and also tended to provide some support for the USD. I would be highlighting today the economic releases. We get the ADP national employment figure. It's the first employment data about the whole month of May. It's expected to rise to reach 300K and could provide some support for the US dollars. It would imply that there were more job openings in the US economy in the past month, in May. Also, traders tend to associate the ADP national employment figure with the NFP figure of the US employment report, which is due out on Friday. We don't share this view, but still, traders keep an eye out for this. So it should be noted. We also get the JOLTS job openings. And in my opinion, the main release from the US today is going to be the ISM manufacturing PMI figure. That's for May. It's expected to drop. And if actually so, could weaken the US dollar, as it would imply practically a slowdown of the expansion of economic activity in the US manufacturing sector for the past month. Such a slowdown could also lead to a wider slowdown of the GDP rate, which, by the way, for quarter one is in the negatives anyway. So more or less as for financial releases from the US side, that should be it. We would also like to note on the monetary front, we get the speaker today, and that would be, give me a sec, practically New York Fed President Williams, and later on we would be having St. Louis Fed President Bullard. Bullard is tilting more to the hawkish side. So we may see some comments coming here which could provide some support for the USD as well. That should sum it up for the day for the US dollar.
Okay. Did the cautiousness in the market sentiment hurt the US stock market?
Actually, it did. It was characteristic that all three main indexes, the Dow Jones, S&P 500, and NASDAQ, ended the day in the reds after 3 or 4 days of consecutive wins. So the confidence of stock market participants seems to have been shaken a little bit. We should note that in the pre-market hours, the indexes seem to remain in the reds. However, there are some mixed signals here. I would like to see how the American session actually opens and get a sense of the feeling of the American Open to be able to draw some more safe conclusions, but still that's highly uncertain. We would also like to note that today we get the dividends reports, and I would highlight practically two companies. The first would be Harley-Davidson, HOG, and the second would be Home Depot. At the same time, the rise of US yields, should it continue, would be implying once again a rather cautious market sentiment, which could more or less weaken US stock markets even further.
Okay. How did gold's price react?
Gold's price actually dropped, and that could be understood as the non-interest bearing precious metal may have been adversely affected by the rise of US yields. That would be one factor. Also, given that gold prices are denominated in US dollars, the rise of the US dollar may have additionally weakened gold prices. Other than that, we would expect practically, should there be a serious cautious sentiment in the market, we may see some support for the gold price, as practically gold's also been considered as a safe haven. So I would once again like to see how US yields are behaving, what the market sentiment will be tilting to, and also how the US dollar is going to be behaving in order to decide and have a better understanding where gold prices are heading to.
Okay. Did we note the weakening of the JPY against the USD?
Yeah, it was one of the most intense movements in the FX market yesterday. Majors had low volatility, but JPY did not. Actually, USD JPY rose substantially, and that would be an indication of a JPY weakness, which may have been hurt also by the rise of US yields. Please note that JPY dropped not only against the US dollar, it also dropped against the euro and the pound. So the issue for USD JPY, it seemed like it was a double hit, as on the one hand we had a strengthening US dollar, at the same time we had a weakening JPY. And that's why we had a wide divergence in the fluctuation of USD JPY, given the low volatility of other major pairs, such as Eurusd or GBP USD or AUD USD later on.
Okay. And what other updates are there for today and early tomorrow?
Oh, it's going to be a full day. It's going to be a full day. We have already mentioned the US releases. We have mentioned also the Canada Bank of Canada interest rate decision. Euro traders may focus on ECB President Lagarde's comments. That should be today in the European session. And later in the American session, we note also ECB board member and chief strategist, that would be Philip Lane, which will be making some comments in the American session. Now, in the past few days, ECB officials seem to be actually highlighting that there will be rate hikes to come in July and September. However, they also underscored the gradual approach of the bank. Now, Euro's reaction on this will depend largely on two factors. The first is whether the tone of the language of the comments will weigh more on the rate hikes and the bank's intentions to actually curb inflationary pressures in the Eurozone. Should that be the case, we may see the euro getting some support. On the flip side, should the bank maintain a tone which is not exactly cautious, but would still underscore the graduality of its approach to the tightening of the monetary policy, we may see euro traders remain uninterested or even the euro losing some ground. Other than that, I would be highlighting in the Asian session, we get Australia's trade balance, and the trade balance is expected to rise. Should that be the case, we may see the Aussie getting some support. Please note that we had also early this morning the GDP releases from Australia. That was for Q1. Now the rate decelerated, however, it did not decelerate as much as the market expected, and that happened both on a quarter-on-quarter level as well as on a year-on-year level. So things may not be as bad as initially Aussie traders worried. At the same time, we had news from China, which also interested Aussie traders. The Caixin manufacturing PMI figure was out. That was for the month of May. Once again, we had, I would dare to say, okay, an improvement, but still the indicator remained below the reading of 50. And that would be the cutoff point. So practically, we had another contraction of economic activity in the Chinese manufacturing sector, but not as wide as we had originally expected. And that could be considered in some ways as a positive for the AUD. Overall, though, the market had low volatility on both releases, and we may see that the mixed signals more or less kept a stability for the Aussie. However, that we can see that later on in the technical analysis more clearly how it behaved.
Great. Thank you, Peter. Thanks, everyone, for joining us. After a short break for technical analysis with Peter Yosif.
Thank you. So welcome everybody. This is Peter Yosif, Senior Analyst at IronFX. Together we'll be going through a technical analysis for various trading instruments. We make a start. You can see on your screen right now the US dollar index. That's a 4-hour chart. Note the price action yesterday in the early Asian session was able to break the downward trend line. If you recall, yesterday in the technical analysis of the USD index, we had discussed the possibility of maintaining a sideways motion between the 102.05. Let me readjust this. There you go. Clear to see. And we can see that the index actually did that. It respected the 102.05. It was not able to clearly escape the boundaries set by the first resistance line, the R1, the 102.05. We tend to maintain a bias for a sideways motion between the 102.05 and the 101.30 currently, but for the outlook of the index to change from a sideways motion towards a bullish outlook, we would require a clear breaking of the 102.05 and the pair to start aiming, the index to start aiming at the 102.09, 102.9, the R2. Excuse me. Please note how the RSI indicator is above the reading of 50, which may be implying some bullish tendencies here. On the flip side, the price action has hit the upper Bollinger Band, forcing the price action actually to stabilize just below the 102.05. Nevertheless, should the bulls take over, once again, we would require a clear breaking of the 102.05 and the index to start aiming for the 102.90. Higher than that, we would also like to note the 103.95, providing resistance here, here, and here. So it's a rather valid resistance line. Traders seem to be taking notice of it. To the downside, and should the bears take over, we may see the pair breaking the 101.30. That would be probably the first signal that the sideways trend is about to change for a bearish one. That would be a clear breaking, though, of the 101.30, and the index would start aiming for the 99.80, which provided support somewhere here. And that's an extreme bearish scenario. We note the S3 98.40. Once again, though, for the time being, we maintain a bias for a sideways motion until the index actually breaks either the R1 or the S1. Moving on to Eurusd. Eurusd, which corrected lower. However, more or less, despite the correction, it regained some ground, maintaining a sideways motion just below the 1.0740. So we tend to maintain our sideways bias, given also that the price action is pretty near to the 20 moving average, which is the mid Bollinger Band. Also note how the RSI is running along the reading of 50, implying a rather indecisive market. Once again, rather substantiating the idea of a possibly sideways movement for the pair the next 24 hours from now. Also, the narrowing of the candlesticks tends to imply a low volatility for the pair as well. Now to the upside, and should the bulls take over, we may see the pair actually breaking the 1.0740, which provided resistance here and was aimed for here. Higher than that would be the 1.0935, providing resistance around the 21st of April. And the highest level noted would be the 1.1185. To the downside, prior resistance line being the 1.0605. Lower than that would be the 1.0480, providing support here, aimed for here, support here. And lower than that would be the S3, which is also the lowest level in our chart, the 1.0355, which reversed the intense downward price action movement of Eurusd around the 12th to the 13th of May, providing a nice upward movement, slow but stable, up until the 30th of May, which the upward motion was broken. Once again, sideways movement expected for the time being for the pair. And the DUSD, it's the 4-hour chart, and the DUSD has respected the 0.6475 and maintained a sideways motion after breaking the upward trend line, which has been guiding the pair since the 16th of May up until actually yesterday in the Asian session. We had forecasted that the pair may maintain a sideways motion between the 0.6555 and the 0.6475. It did. We tend to maintain that view as long as the price action remains between the R1 and the S1. For a bullish outlook, we would require a clear breaking of the R1 and for the pair to start aiming for the 0.6645. Higher than that, we note a prior resistance line, the 0.6715, which actually was a price support line and has now been turned into a resistance line as the price action is below it. To the downside, with the 0.6475, that would practically cause us to consider a possible bearish outlook for the pair. It would require also the pair to start aiming for 0.6365, which provided support here. There is though a middle ground here, which should be noted as well. Somewhere here. Here you go. Now you can see that this level, which is at 1.6420, let's lock it. Here we go. Now that's at 0.6420 and provided support once, twice, and all this area here, which was not the 1st, the 2nd of May until the 5th of May. So I would have a second look at this. Lower than that, we note the 0.6365, which provided support here and resistance here. And even lower, the 0.6290, which provided support here. That was actually able to reverse the downward motion presented by the pair around the 18th to the 19th of May. And note how beautiful upward motion followed. Actually, it respected also the upward trend line. To the upside, and should the bulls take over, we would require a clear breaking of the 0.6555, which provided resistance once, twice, and support here. And that would actually force us to consider switching our bias for a sideways motion in favor of a bullish outlook for the pair, especially should the pair once again aim for the 0.6645, which provided resistance here. For the time being, we maintain our bias for a sideways motion between the R1 and the S1. The RSI indicator is running along the reading of 50, once again implying a rather indecisive market. And that could be also providing some reassurance for the sideways motion of the pair for the time being. Let's move to the pound, and this would be cables for our chart. Cable, which maintained also sideways motion despite some volatility below the 1.2610. We noted that the price action could drop below it yesterday, and it actually did. Let me readjust the resistance and support lines, as it seems that the price action had suspected the level. And I think that would be more clear to see if we look at the 1 hour chart. Yeah, definitely here and here. Let's have a look at the 4 hour chart once again. And the resistance line now becomes a support line down here, which is also the lowest part of our chart. Let's turn this into green and place it at the 2165. We missed the color. There you go. Fixed. That's it. Let's readjust the levels. $1.2165. The second support line with a beautiful touch here, being placed at 1.23. Another support line being placed at the 1.25. Actually, this was a resistance line. As the price action, you see, it was providing resistance here and here. Provided some support here, but not that much. And as the price action is now above it, it has turned into support line. $1.26. Sorry, that should be 1.2610. Also, there are two at 1.275. And the 1.2965. There you go. That's it. Once again, sideways motion expected, supported by the idea that the RSI indicator is running along the reading of 50. Should the bulls take over, we would expect a clear breaking of the 1.2610 and the pair to actually reach, if not breach, the 1.2775, which provided resistance here. Higher than that, we also note the 1.2965. Should the bears take over, we may see the pair actually breaking the 1.25 and start aiming for the 1.23. Now to switch our bias for sideways motion, we would require, once again, a clear breaking of either the R1 or the S1. And depending on the breaking, we would switch our sideways motion bias. USD JPY, that was intense. The price actually maintained its upward movement. Actually, the slope came even steeper to the upside, broke the 1.2885 resistance line, now has been turned into support line, and seems to be aiming for the 130.25. Let's readjust this. Let's find a new bullish target. Let's switch to the weekly chart. Okay, that goes way back, way back. Nothing. Okay, given the intensity of the price action, my next level would be placed around 100 pips higher. And that would practically bring it up to 1.32, 32, 35. Maybe even a little bit higher, 32.5. This is an extreme case scenario. I'm telling you guys. Placing now the R1 at the 130.25. The R2 at 131.35. And the R3 at 132.80. Now we tend to maintain a bullish outlook for the pair, but let's have a look also at the support lines. just in case. 108.2885. Our resistance line, which has now been turned into support line as the price action has broken above it, clearly. 127.55 would be the second support line. And the third one would be at 126.80. Once again, a clear upward bullish outlook for the pair, supported also by the RSI indicator, which has breached above the reading of 70. However, that breach also tends to signal us that the pair may have reached overbought levels, so it may be ripe for a correction lower. So a correction lower should not take traders by surprise. It's all being signaled by the fact that the price action of USD JPY is actually running along the upper Bollinger Band, forcing it higher, but at some point it will have to correct a little bit lower, stabilize, take a breather before the bulls actually continue their charge for higher grounds. To the upside, we note the 130.25 resistance line, which provided resistance here, and higher than that would be the 131.35, which is the highest point in our chart. Even higher, we note as a possible target in an extreme bullish scenario, the 132.80. To the downside, we note the 128.85, which provided the resistance twice, support here. Lower than that, the 127.55, and even lower, the 126.80. Should a correction take place lower, to switch our bullish outlook for the pair, we would require a clear breaking of the pre-mentioned upward trend line guiding the pair lately. Let me delete these ones, so we have a clearer picture of the chart. That's it. And the initial reaction would be to switch the bullish outlook in favor of a bias for a sideways movement. However, that would depend largely on how steep the downward movement of the price action will be should the bears take over. AUD USD for our chart in a sideways movement, actually about to break the upward trend line, and in my opinion, most probably it will. Nevertheless, note how the price action is forming higher trough, and we would like to readjust this support line into resistance line somewhere here. Let me readjust this at 1.72. Sorry, that would be 0.72. That would be our new first resistance line. The second would be here at 0.7265. Note the resistance provided for the pair here. And the R3 placed at 0.70. Let me have a look at this one again. 73.40. Provided support here and has now been turned into a resistance line. To the downside, we are adjusting the support lines. 0.7150. However, that's too tight. What's the lower level? Has been broken a couple of times. And it's too tight to the price action. I would widen it somewhere here, where it was before actually. $0.7125. The second support line would be at 0.7030. And the third would be at 0.6950. Once again, as the price action seems about to break the upward trend line, we are switching our bias for a bullish outlook in favor of a sideways motion. However, that would require a clear breaking of the upward trend line. It should be noted that the RSI indicator is above the reading of 50 with some slight bullish tendencies, but I would like to see it actually aiming for the reading of 70 to get a sense that the market is actually still from a bullish sentiment for the pair. For the time being, it seems that the upward trend line is going to be broken, and if so, as mentioned before, we would switch our bullish outlook in favor of a sideways bias. Nevertheless, should the bulls take over, we may see the pair breaking the 0.72, aiming, if not breaking, the 0.7265, which provides resistance layer here, and thus paving the way for 0.7340. To the downside, and should the bears take over, we would require a clear breaking of the upward trend line, a breaking of the 0.7125 to switch it in favor of a bearish outlook, and the pair to start aiming clearly the 0.7030, which provided support here and resistance here. Once again, support here. In an extreme bearish scenario, we note the S3 0.6950 providing support here. Let's have a look at USD CHF. Once again, sideways bias prevails, given that the pair remains in a sideways movement between the 0.9550 and there is a new resistance line being formed. It was actually verified. That's being placed at 0.9640. Pretty tight actually, but I have to note that the price action presents very low volatility. Note how the Bollinger Bands actually converged and are now just opening from the upward movement of the pair, but still it's very low. Let's delete this eclipse. Now, for the sideways bias to change in favor of a bullish outlook, we would require clear breaking of the 96.40, and for the pair to start aiming for the 0.9760, which provides a resistance here. Even higher than that, we note the 0.9875, which provides support here and resistance here. And to the downside, for us to switch our bias for sideways movement in favor of a bearish outlook, we would require clear breaking of the S1 at 0.9550 and the price action to actually actively start aiming for the 0.9410, which is the second support line, the S2, right here, providing support back at the end of our chart. Lower than that, we note also the 92.85. Let's have a look at USD CAD, and given also that we have BOC's interest rate decision, downward trend line has been broken. Some readjustments should be made here. First support line, price action actually dipped just below it at 26.30. And this resistance line as well can be narrowed. 26.85, 1.2685. There you go. So the downward trend line has been broken. For the time being, we switch our bias for a bearish outlook in favor of a sideways movement between the 1.2685 and the 1.2630 levels. I would like to note one thing though. The catch is here. It's the RSI indicator. The RSI indicator is below the reading of 50. It's actually aiming for the reading of 30 right now. So that would be implying that the bears are still not out of the woods. They're still present for the pair. And they may take the charge of the direction of the pair downwards once again. However, that would require, for that we would require clear breaking of the 1.2630 support line, providing support yesterday, and for the pair to actually aim actively at the 1.2565, if not even lower, for the 1.2465 before switching for a bullish outlook. In the case the bulls take over, which does not seem to be the case right now, but nevertheless, we would require clear breaking of the 1.2685. We have to readjust our second resistance line here. This was a support line, but as the price action has moved below it, it's now turned to resistance line at 1.2755. And higher than that, we note the 1.2895, which provided resistance right here. One could also argue ability for this level. Yeah, note how it has provided resistance here, here, here. I wouldn't say this one, but still it was a false break and was aimed for here. That's an interesting level, and I think we'll take it. It's being placed at 1.2850. That's it. Let's have a look at gold. Oh, gold's price is moving downwards. Second consecutive day. It has actually broken the first support line. We'll have to switch this one. The resistance line. Let's make a hunt for it. $1833. The second resistance line would be placed at 1895. We could also place another resistance line here. But that would be too close to the price action, even lower. See the cap. Let's readjust this. Okay, it's going to be a wide movement at 1869. even 70. Let's have a look. Yeah. This one gets out of the way. And the 1903, which provided resistance here. That should sum it up for the resistance lines. Let's have a look at this up at the trend direction. Let's drill into the 1 hour chart. That should be it. Let's zoom in a little bit. Okay, nice touches. Zoom out. Go back to the 4 hour chart. Yeah. Let's have a look at the support lines. We've got one at 1807. And the second, 787. Let's find the third one. We're on a hunt right now. That was a nice touch. That's an even better one. Here you go. $17.60. Green, please. Yeah. Now the chart is ready. So gold's price has a downward movement, which is being characterized by a downward trend line. So as long as the price action remains below the downward trend line, we tend to maintain a bearish outlook. Note also how the RSI indicator has a clear downward movement, aiming, if not hasn't actually reached the level of 30, but it's clear that the bears are in play here. Now, should the bearish sentiment continue, we may see the pair aiming for the 1807, and lower than that, we note also the 1787. To the upside, and should the price action actually break the downward trend line pre-mentioned, note that it's still pretty fresh, so there may be some turbulence here. We would expect the price action of gold to actually break also the 1833 and start aiming for the 1870. We would require clear breaking of the 1870 before switching our bias for a sideways motion in favor of a bullish outlook though. Let's move to WTI, last chart for the day. Oh, that was a movement. Here you go. New fresh resistance line. and another one lower. It's too wide. This one better. Before we move on to this level, it has to pass through here, and that would be 106.30. Oh God. Sorry, 106 point. Next one, S2, will be set at 110. And the S1 at 113. The R1 is being placed at 115.80. The R2 at 118.5. This is a little bit too wide. Let's have a look at this. Okay. With a clear cut here and here. Yeah, that should stand. At 123.60. So now, given the correction low of WTI prices, after testing the 118.50 resistance line and breaking the 115.80 support line, now turn to resistance. It's interesting how the pair actually respected, the commodity actually respected the 100 line, which used to be a prior resistance line here, now has been turned into a support line. We tend to maintain a bias for a sideways motion initially between the 113 and the 115.80. Should the bulls actually take over, we may see the price action breaking the 115.80 and start aiming for the 118.50. Should R2 also be broken, the next level, quite wider, is the 123.60. To the downside, and should the selling interest be expressed by the market, we may see the commodity breaking the 113, which provided support yesterday, and testing practically the 110, which used to be a resistance line, has now been turned into support line. Should S2 also be broken, the next level noted would be 106.30, providing support here, here, and resistance here. Note how the RSI indicator is just above the reading of 50, maybe some bullish tendencies, but I would like to see more. It actually reflects the last candlestick, the last rise in the past 4 hours. So once again, bias for sideways motion unless the R1 or the S1 are clearly broken. And actually, we would require the commodity to start aiming for either the R2 to switch it towards a bullish outlook or the S2 to switch it towards a bearish outlook. There's one interesting element as well here, though, which should be noted, is this one. Now, if this upward trend line actually takes over and seems that at some levels, we may see the commodities price actually breaking the 118.50. But that remains still to be seen. So, from all of us here at IronFX, best wishes for solid trading.
Hello, everyone. My name is Antonio, and welcome to IronFX Live TV. Today, we will be talking about the different trading aspects, the areas in which we can trade, and the types of analysis that can be beneficial to potential traders. Now, obviously, trading is complicated, but it can be very simple. It's been around since the late 1800s, so it's nothing new. Stock markets have been around for a very long time now. And the idea is to be able to give access to the normal people like you and me in order to trade, to take advantage of these opportunities that happen in the daily markets, and most importantly, to be able to have a potential profit on them. That is the general idea. Now, having said that, there are two major types of analysis that traders usually implement. One is known as technical analysis, and the other is known as fundamental analysis. What is the difference? The difference is that one is looking at the charts and understanding past movements, and the other is using geopolitical events and live announcements to determine the direction of an asset. I'll give you an example. When it comes to technical analysis, there's a lot of tools that can be used, whether that's indicators, support and resistance levels, Bollinger Bands, Ichimoku clouds. There's a lot, and it's been going on since the 70s. Now, in the 70s and 80s, technical analysis was always the rage because that was where technology was at that point. Nowadays, technical analysis is used more of a backup, let's say, to concur what is going on around the world. That is where fundamental analysis comes in. Fundamental analysis is a staple in the sense of, in this day and age when information is being shared so easily, so fast, whether it's through social media, through emails, through Instagram, Telegram groups, you name it, information is readily available. Of course, you got to know what information to use and when to use it. And of course, that's where the brokerage comes in. That is part of our job in order to relay the market research to the clients so they can understand the potential opportunities and, of course, take advantage, trade, and become profitable. Now, following from that, I'll give you an example of what fundamental analysis entails. Now, the USA is the world's largest manufacturer of corn, okay? Now, obviously, producing and selling corn is simple demand and supply. If there is less demand and more supply, the prices tend to go down, and vice versa. If there is less supply and more demand, the prices tend to rise. Now, about 3 to 4 years ago, maybe a little bit more, there was a severe drought in America. What do I mean by that? It didn't rain as much as they expected it to, as much as they had forecasted it to rain. Having said that, after the season finished, they did not produce as much corn, yield as much corn as they expected to. Now, here's a question. What connection does corn, sweet corn, and the petrol that we put in our car have? Some of you might know, some of you might not. I'll explain. Once corn is produced and we take away the corn and we sell it to be eaten, the stem of the corn plant is actually used to produce methane, methane gas. Methane gas is then mixed with crude oil in order to make petrol or gasoline, depending on where you are in the world, how you say it, for our cars. So right now, I'm sure everybody sees that the price of petrol for our cars has risen exponentially. That is because of the war. Okay, that's fundamental analysis. Going back to our example, because it didn't rain as much, they didn't produce enough corn. Not enough corn was produced, so the price of corn went up. Because less corn was produced,